Hey everyone, welcome to Bite-Size Crypto Recap. If you're new to the world of cryptocurrency and feeling overwhelmed by all the information out there, don't worry, you're in the right place. In this video, I'll walk you through the basics of getting started with crypto, the actual things you need to do before you even sign into Coinbase for the first time, how to stay safe. And don't worry, I'll explain all those weird words you may hear like FOMO, whales, bear market, and Lambo. So, what exactly is cryptocurrency? If you already know, you're welcome to fast forward. In simple terms, cryptocurrency is digital money designed to work as a medium of exchange using cryptography to secure transactions. Unlike traditional money, it operates on a technology called blockchain, which is a decentralized network spread across many computers. Imagine blockchain as a digital ledger that records every transaction in a secure, unchangeable block. Each block is linked to the previous one, forming a chain, hence the name blockchain. Think of it as a digital train, where each block is a carriage loaded with transaction data, and it's all connected securely and transparently. One of the key features of blockchain is decentralization. Unlike our traditional banking system, where a central authority like a bank or government controls and validates transactions, a decentralized system means there's no single point of control. Instead, transactions are verified by a network of computers, making it more secure and less susceptible to manipulation. With traditional currencies like the USD, the bank controls your money. They can freeze accounts, reverse transactions, and even limit access. But with crypto, you control your assets directly. This independence from central banks is one of the main appeals of cryptocurrency. But with great power comes great responsibility. You're in charge of your security. Real people have used crypto to build wealth, like early Bitcoin investors who saw huge returns, or those who diversified with Ethereum or smaller altcoins. Success stories include people like Eric Finman, who became a millionaire by investing $1,000 in Bitcoin at age 12, or individuals using crypto for everyday payments and international transfers, avoiding hefty fees. But remember, with potential rewards come risks, so it's essential to be well prepared and informed. Before you even create a crypto account, there are a few essential steps to take for your safety and success. Here's how to prepare. First, invest in a fire safe or a fire safe bag to protect your valuables, including your crypto backups from theft or damage. Links to recommended products are in the description below. Get a physical notebook. Personally, I use a Moleskine. Write down all your critical information here, including logins, passwords, and seed phrases. Some people even keep a ledger of their purchases here, but there are apps to do that also. Avoid digital notes or cloud storage for these sensitive details. Set up a new email account that you've never used before, and don't use Gmail or Yahoo. I recommend Proton Mail for its high security and privacy features. Links to sign up are also below. Choose a complex, long password that's unique to this email and make sure to write it down in your notebook. Never save it on your devices or browsers. Never screenshot passwords, seed phrases, or any sensitive information. And don't store these details in your phone's Notes app or send them via text messages. This protects you from potential hacks or invasions into your crypto. Stay vigilant and skeptical of unsolicited messages or requests for your private keys or personal information. Finally, for long-term storage, consider using a hardware wallet like Trezor, which keeps your assets offline and secure from hacks. I've linked to the one I use below. Before we dive into setting up a wallet, it's important to understand the difference between wallets, exchanges, and platforms. This can be confusing for beginners, so let's clear it up. A wallet is a tool that allows you to store, send, and receive cryptocurrencies. There are two main types: hot wallets, which are connected to the internet, and cold wallets, which are offline and more secure. Think of exchanges like Coinbase, Binance, or Kraken as the marketplaces where you can buy, sell, or trade cryptocurrencies. Exchanges hold your funds temporarily when you buy or sell crypto, but aren't considered the safest place to keep your funds long-term. These are broader ecosystems that provide various services related to crypto, including exchanges, wallets, staking, and other financial products. An example is Coinbase, which offers both exchange services and wallet functionality. Now let's pretend set up a wallet. For beginners, I recommend starting with a hot wallet like MetaMask or Coinbase Wallet, which are user-friendly and accessible from your smartphone or computer. Here's how to set one up. Visit the official website or app store to download the app. Set a strong password. You may feel a bit weird uploading your ID for verification, but it's absolutely necessary and a standard part of the process to ensure security and compliance. You'll receive a seed phrase, a series of words that's your key to recovering your wallet if needed. Write this down in your notebook and store it securely. Never share it with anyone or store it digitally. Consider setting up a separate checking or savings account not linked to your primary finances. Don't activate overdraft protection on this account to limit potential losses. This can help compartmentalize your crypto activities and add another layer of security. So let's get ready to buy your first crypto. With your wallet set up and safety measures in place, you're almost ready to buy your first crypto. You'll need to use a cryptocurrency exchange like Coinbase, Binance, or Kraken to make purchases. First, create an account. Sign up on your chosen exchange using your new email and ensure your password is strong and unique. Enable two-factor authentication for extra security. Next, verify your identity. Follow the steps to verify your ID. This is a standard security measure. Then deposit funds. Use a bank transfer, debit card, or even PayPal to deposit funds into your exchange account. Sometimes this takes a little time for money to transfer, so plan ahead. We'll cover how to actually buy your first crypto in detail in a future video. There are some key topics to consider before ever investing your first dollar into crypto. First, understand the project. Each cryptocurrency is part of a larger project with a specific purpose and use case. For example, Ethereum is a platform for decentralized applications, while Ripple aims to facilitate cross-border payments for banks. Read the white papers and research the teams behind each project to ensure you understand what you're investing in. This can usually be found on the website. And to mention the website, just take a look at how the website looks, if the spelling is correct, and so on. If they can't put time and effort into their website, how the hell are they going to create a legitimate cryptocurrency? Taking a peek at their socials aren't a bad idea either. Second, develop your own investment thesis. This is your reasoning for why a particular crypto asset might be a good investment. It should be based on the project's fundamentals, use case, and potential for growth. Avoid buying just because of hype or because everyone else is. Third, assess your own risk tolerance. Crypto can be highly volatile, and prices can swing dramatically in a short period of time. If you're risk-averse, consider starting with more established cryptocurrencies like Bitcoin or Ethereum, which tend to be less volatile than newer, smaller coins. Fourth, define your investment goals. Are you looking for long-term growth, quick profits, or are you just experimenting to learn more? Your goals will influence your strategy and which cryptos you choose to invest in. And finally, never invest what you can't afford to lose. This is a golden rule in crypto investing. The market can be unpredictable, and while there are opportunities for big gains, there are also risks of significant losses. Let's take a deeper look at the pros and cons of crypto in 2024. The biggest pro, decentralization. You control your own money without needing permission from banks or governments, offering financial freedom and independence. As well, over the last decade, there has been increased adoption. More businesses and institutions are accepting crypto, making it easier to integrate into everyday life. A few examples are Microsoft, Overstock, PayPal, and AT&T. Another draw is the technological innovation that crypto supports. The development of blockchain technology, smart contracts, DeFi, and NFTs continues to drive innovation across industries. There is also a potential for high returns. Cryptocurrencies can offer significant returns, especially for early adopters of promising projects. Privacy and security are enhanced and offer privacy features. And blockchain's immutable nature provides security for transactions. Some see cryptocurrencies like Bitcoin as a hedge against inflation due to their fixed supply. With the good comes the bad, though. With crypto, there is high market volatility, leading to potential losses. This is especially true for newer or less established coins. There is regulatory uncertainty as well. Governments around the world are still figuring out how to regulate crypto, which can lead to sudden changes that impact the market. For instance, in 2024, Honduras banned crypto, while China and Russia have strict rules. Also, despite the security of blockchain technology, the crypto space is still vulnerable to hacks, scams, and fraud, mostly because people are not educated enough about how to protect themselves. Interestingly, proof-of-work cryptocurrencies like Bitcoin consume a lot of energy, raising environmental concerns. And obviously, for beginners, the technical aspects of crypto can be daunting. It takes time to learn how to safely use and invest in these assets. But it's fun and worth it, so stick with me. So when the lack of traditional banking is a pro, it is also a con because of the lack of consumer protections. If your crypto is lost or stolen, it's gone. It's up to you to keep your investments secure. Weigh these factors carefully as you consider entering the crypto space, and always do your own research. As you dive into the crypto world, you're going to hear a lot of unique terms and phrases that might sound confusing at first. Don't worry, it's all part of the learning process. Let's break down some of the most common terms you'll encounter and what they actually mean in a way that's easy to digest. Think of this as your crash course in crypto lingo. FOMO, or the fear of missing out, is that nagging feeling you get when you see everyone making gains and you're not. It's what pushes people to buy assets impulsively, usually at a high price, because they don't want to miss out on the potential profit. Next, originally a typo 4-hold, HODL has become a mantra in the crypto world. It means holding onto your coins no matter what the market does, believing they'll be worth more in the future. So when prices drop, you HODL instead of selling in a panic. Okay, so whales, sharks, and fish. These terms refer to the amount a crypto holder has. Whales are individuals or entities with massive amounts of crypto, enough to influence the market. For instance, if a whale sells a large amount of cryptocurrency, it can flood the market with excess supply, causing the price to drop due to the imbalance between supply and demand. They may do this on purpose so they can buy it back up cheaper than before. Sharks are significant but not as powerful as whales, while fish are the smaller retail investors like you and me. An altcoin is simply any cryptocurrency that isn't Bitcoin. Think of Ethereum, Litecoin, or Ripple. These are all altcoins. They have their own projects and use cases that differentiate them from Bitcoin. However, a shitcoin is a derogatory term for coins that are seen as worthless or having little potential. These pop in and out of the market daily and usually have a high risk. These are often driven by hype with no solid project behind them, so be cautious. Again, check that white paper. An ATH, or all-time high, is the highest price ever reached by a cryptocurrency. When you hear people celebrating an ATH, it means their investments have hit a record peak value. A bag holder is someone holding on to a cryptocurrency that has significantly dropped in value. They're left holding the bag, often hoping for a recovery that might never come. Okay, bearish and bullish. If you're bearish, you believe prices will go down. If you're bullish, you believe prices will go up. These terms come from stock market lingo but apply here too. A bear market is when prices are generally declining, while a bull market is when prices are rising. When you hear people say buy the dip, this is a strategy where you buy an asset when its price drops, hoping it will go back up. It's a way to buy low with the intention of selling high later. A dead coin refers to a cryptocurrency that is no longer active, has no development, no trading volume, and essentially no value. It's like a failed startup in the crypto world. People can dump coins, and this is when someone sells off a large amount of a cryptocurrency, usually causing the price to drop. Often associated with whales who can move the market with their actions. You may hear about the Fear and Greed Index, a metric that measures the emotions and sentiment of the market. High greed means people are likely buying. High fear means people are likely selling. It's a quick way to gauge overall market sentiment. However, many people will say to buy in high fear and dips to make gains. I'll drop a link below to my favorite website that tells you the status. FUD stands for fear, uncertainty, and doubt. It's negative information or rumors that spread to cause panic selling. A FUDster is someone who spreads FUD to manipulate the market. Lambo is short for Lamborghini, and it's a term used jokingly in the community to signify making it big in crypto. It's often associated with the question, when Lambo, implying, when will I get rich enough to buy a Lamborghini? Next up, a meme coin is a cryptocurrency that's created as a joke or based on internet memes. Dogecoin started as a meme coin but has since gained serious value and popularity. Alright, so when someone says a coin is going to the moon, they mean they expect its value to skyrocket. A pump and dump is a scheme where the price of a coin is artificially inflated or pumped through false or misleading information, only for the perpetrators to sell or dump their coins at a high price before it crashes. A lot of people use shitcoins to do this. Some people make money but understand that bots usually rule this world, so it's hard to stand a chance against the bots. An NFT, or non-fungible token, is a unique digital asset that represents ownership of a specific item or piece of content, like art, music, or videos. NFTs are one of a kind and can't be replaced with something else. They are hard to understand, so we'll get into that in a different video. A rug pull is a scam where the developers of a project suddenly abandon it and run off with investors' funds. It's a common scam in the DeFi space, so always do thorough research before investing. Did you know you can stake coins? This is the process of locking up your crypto in a wallet to support the operations of a blockchain network, like validating transactions. In return, you earn rewards or interest, kind of like earning dividends on stocks. If you aren't going to be doing anything with that particular crypto, why not let it make you money? One thing you don't want to have is weak hands. This refers to investors who sell their assets at the first sign of trouble, unable to handle the market's volatility. The opposite of this is having diamond hands, which means holding on tight no matter what the market does because you believe in the long-term value. These are really cool. Smart contracts are self-executing contracts with the terms of the agreement directly written into code. This is currently being used in IBM's Food Trust platform, in real estate transactions, insurance claims, and even by Walmart. They automatically execute actions when predefined conditions are met, reducing the need for intermediaries. Okay, that white paper is a detailed document that explains the purpose, technology, and roadmap of a cryptocurrency project. It's like a business plan and is a must-read before investing in any crypto. LFG stands for Let's Effing Go, a phrase used to express excitement or motivation, especially when things are looking good or when hyping up the community. We'll stop there with the crypto lingo for now. Cryptocurrency is a fast-evolving space, so continuous learning is crucial. I have multiple trusted resources below in the description, but here are a few resources to help you stay updated. The CoinMarketCap and CoinGecko websites are great for tracking prices and news. You can follow YouTube channels like Coin Bureau and, of course, Bite-Sized Crypto Recap for regular updates. Consider reading Bitcoin Standard and Mastering Bitcoin for deeper insights. You can also check out the Pomp Podcast and the Unchained Podcast for expert insights on the crypto world. And that's a wrap. Now you have everything you need to start your crypto journey safely and smartly. In my next video, I'll cover crypto options in depth, the most common ones and their use cases, some of the trending altcoins and shitcoins, and I'll help you decide what to buy first. If this video helped, please like, subscribe, and hit the bell for more bite-sized crypto shorts updates and my next long-form video about the different cryptos out there and how to begin. Drop any questions you have in the comments below, and I'll be happy to help. Thanks for watching, and happy investing.